Hello everyone, and welcome to this presentation of how to increase your trading odds for success. Welcome, my name is Primo, and this promises to be a great presentation today because I'm going to start out by showing you what, in my opinion, doesn't work, conventional wisdom of trading styles and techniques which really have no consistency to them. And then I'm going to share with you what really does have some consistency, an actual trading strategy that we employ at Specialist Trading. I'm going to, in fact, share two of those rules that make up that trading strategy with you. And then, lastly, I'm going to show you how you can even increase your odds for success even more by applying a simple tool. So this, once again, promises to be a really great presentation, so stick around and take a lot of notes. Now, once again, my name is Primo. I am the president and founder of Specialist Trading. If you are new to my webinars, we'll just let you know first and foremost that Specialist Trading is an educational company. Now, we provide all of our students and members with strategies and techniques that I've accumulated over the years in which to trade. But our philosophy is not just simply to force feed you signals so that you blindly take them. We really want to educate you so that you can ultimately put the power back in your own hands and make your own trading decisions. You see, it's my belief that the reason why upwards of 80% of all traders fail is because you're relying on someone or something else to tell you what to do. Think of your own trading. Are you going to some chat room or trading room, or do you have some convoluted indicator, or do you listen to some trading guru to tell you when to buy or when to sell? Even if you follow the news, you can't make a decision until the news event comes out. This is what, in my opinion, leads to failure in trading. What really leads to consistency in trading is making your own decisions. So we provide you with all the things that I've accumulated in my career. Now, I've been trading for 38 years. I started out my trading career on the floor of the Pacific Stock Exchange. I was a trader on the floor for 16 years, and 9 of those years I was a specialist for Donaldson Lufkin and Jen Retz. That meant that I made markets in roughly about 50 stocks. I traded through the crash of 1987 and the great bull market that followed after that. And in the mid-90s, I left the floor to manage money and to pursue my own personal trading. Now, around 7 years ago, I teamed up with Pro Trader Strategies and started Specialist Trading, where all I do is mentor and teach my students all the things that I personally use in my own trading. Okay, so that's basically what we do. Now, as I stated, I'm going to share with you a lot of techniques that have shown consistency. In fact, I'm going to share with you two of the rules to one of our most consistent strategies. But before we begin, I ask that you please take a moment to view our disclaimer. We are required to show you this, so please take a moment to view it, because I'm going to show you a lot of performance results with all these things in the webinar today, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. Now, as you're taking a moment to view our disclaimer, I would also like to invite each and every one of you to follow us on Twitter. There's our handle right there, an abbreviation for Specialist Trading. It's at SPCLSTTRADG. Every day I post free and valuable information, anywhere from daily financial wisdom to actual signals that we are currently in. So there's a lot of great free information. Feel free to follow us on Twitter. Now, as I stated, our sister site is Pro Trader Strategies. They've also constructed a Facebook page for us as well. You simply go to Facebook and log in with Pro Trader Strategies. You'll see a lot more free information as well as a lot of videos on myself and on current trading techniques that we have. Okay, so lots of ways to get information on me and what Specialist Trading teaches. Okay, now before we begin, as I stated, we are first and foremost an educational company. Our philosophy is once again to put the power back in your hands so that you ultimately take all of the knowledge I'm sharing with you that I've accumulated in 38 years. Hopefully will shorten your learning curve so that you don't have to trade 38 years in order to gain all this information, and then basically just to leave you alone to run with it. We don't want you sitting here and virtually waiting every night for signals to be produced and for us to tell you what they are. After 2 weeks or maybe a couple of months, you should be able to spot these signals and everything we teach on your own, and you should be able to trade any market in any time frame on your own. So you're always going to be a member of mine, a student of mine, and you can always come back to me for refresher courses, but it's more about empowering you with this information so that you can ultimately make your own trading decisions. Now, from time to time, we will, with our strategies and techniques, hit these large home runs, these very profitable trades. But that's not really what our motivation is. Our goal is to mainly be consistent. And consistency means you'll have 2 steps forward, 1 step back. We know that from time to time we'll have some small losing trades, but we're more about being consistent in our trading so that our P&L or our equity curve has a nice upward slope, as opposed to going straight up, then straight down, then straight up, then straight down. We're more about instilling consistency in all of our students and in all of our members. This is the way I was taught on the floor. This is what helped me to finally achieve consistency, to enable me to trade for nearly 40 years, and this is what I teach to all of my students. So as you see here, my goal is not to trade for you. My goal is not to force feed you signals so that you blindly take them the way so many other websites do. My goal is to teach you the same things that were taught to me so that you can trade. You'll learn how to trade with the specialist edge. Now, as I stated, I have a lot of great free information to give you today that you can actually start using as early as we could conclude this presentation today. But to make things flow a little better, because I'm going to have so many slides and so many chart examples to share with you today, if you have any questions, kindly wait till the very end of the presentation. There is a question and answer box for me to open up and see all your questions, so I won't even open that up. I won't even know you've submitted anything until the very end. So don't even write anything, since I won't be looking at it. When we conclude, then we'll leave the last 10 or 15 minutes for any questions that you may have. I will answer one question, which is probably the most popular. Is this being recorded? Yes, it is. So if you have to leave early, or if you're having technical difficulties with your computer and the sound, you can request a link to this. Just go to ProTrader Strategies, how you signed up, and they'll send you a link to this recording. All right, so why don't we begin? I'm going to start off by sharing with you what conventional wisdom tells us is supposed to work or supposed to have consistency. And I'm saying this from firsthand experience, not from putting down any method or saying it doesn't work or talking poorly about other educators. I'm just saying from personal experience, because I basically started out just like everyone else, going to all the seminars, reading all the books, and I had a very difficult time when I first started trading. So let's start out with what you're going to learn today. I'm going to share with you two conventional methods that, in my opinion, in my experience, have no consistency to them, but for some reason most traders love to trade with them. Then I'm going to share with you strategy number 4. That's probably our most consistent strategy, trades all markets, all time frames, and all directions, and I'm going to share with you 2 of its 5 rules. Okay? Then I'm going to show you a lot of current trade examples so that you know exactly how the process behind strategy number 4 unfolds. And then, even after seeing the consistency with strategy number 4, I'm going to tell you how you can increase your odds for success even more by adding a very consistent approach to it, and that's called our pet D. All right, so let's start out. Trading method number 1, double bottoms and tops. Okay, this is, when I first started trading, that's all I look for, double bottoms and double tops. This is where we were supposed to decline on a sell-off and where we were supposed to top out on a rally. And if you look at this trading method, this is usually the way it works. I'm going to start out by showing you a lot of older charts just for educational purposes. Then I'll show you some more recent charts as we get into strategy number 4. But as you see in this older chart of Apple, this is what a double bottom looks like. It's basically another way of saying support, where price comes down to 0.1, it bounces and then comes down to 0.2. Now, conventional wisdom tells us that this is where price should stop because we've hit some type of support, and then we go back up. All right, worked perfectly right here, right? And it works the opposite way as well. As we look at this chart in the E-mini on a daily basis, the market, the E-mini futures, rallied up to 0.1, sold off or pulled back, rallied up to 0.2. This is what's known as some type of ceiling or some type of resistance, so this is where you should sell, and look what happens. See, on paper, this works perfectly. It works great, and this will work fine every once in a while in your trading. But this is what usually happens over time. You'll see a perfect example here with TGT. We come down to 0.1, we stop, we rally, we come back down to 0.2. So at this point, you feel confident that this method works. You jump in and buy, and look what happens. Okay, does that look familiar to anybody? I know it does to me because this is the way I used to trade, and this would used to happen to me all the time. So this is one type of method that really conventional wisdom tells us to look for these specific patterns, but over time there really is no consistency to them. You will see them work until it doesn't work, and ultimately you'll give everything back. Now, trading method number 2, which a lot of people love to follow, a great many traders in all markets, are Fibonacci retracements. Everyone loves to know that we're coming down to some magical numbers here and there that work great, and we're not going to go really into how Fibonacci works or what it's based off of. In fact, I'll just share with you probably the simplest Fibonacci levels of all, where Fibonacci's are really based off of retracements in this particular technique. And so the way this works is, as we see here, this older chart of UPS, you discern what the trend is. In this case, it's been going up. And then you bracket off from where the bottom of that trend was, and where we stopped right here, until we started going up into the top. And so one of the most common and simplest ways of determining a Fibonacci retracement is just saying that it will retrace or pull back 50% or half the move from where it started to go up to where it concluded. So if you feel it's concluded here, it looks like the market is starting to sell off, you would place an order to buy at 50%, half the distance down. And you wait for the stock to get down there, which it does, and that's where you buy. And lo and behold, well, it works like magic, right? Got right down to that 50% level and went back up. Okay? It works the same way to the downside. Now the euro-yen, according to your discernment, is going down. It's in a downtrend, so you bracket off from where it started to go down, which is right here, to where it did go down. Okay? Now here is the measured move. So using the retracement level now to go short, you would say once we get to 50% level right here, this is where I'm going to sell, because then it should continue to go lower. So it gets to that 50% level, you sell, you go short the euro-yen, and lo and behold, it works like magic, right? So this works great on paper. You've seen it work yourself a couple of times. So now you decide to jump in. Here's a chart in Tiffany. Obviously, it's in a downtrend. So here are the brackets from where it started to go down, and here's where it stopped. So you know that when it gets to the 50% level, half of the distance, you will sell. So it gets right here, you decide to sell, and look what happens. You see, once again, just like double tops and double bottoms, these techniques will work until they stop working. It's very similar, I've often stated, it's very similar to a gambling approach, to using the slot machines in Vegas, because those are designed to give you this false sense of security that you're actually doing well. But over time, we've seen anyone who's played the slot machines, you have the worst odds available in Las Vegas, because they give you this sense that you're doing well, all the bells and whistles go off, because every once in a while you'll have a winner. But over time, you really have nothing to show for it. You have no gains. You've in fact mostly lost most of your money. Okay? It's the same way with these techniques. You'll have some extremely profitable trades doing these type of techniques, but over time, if you continue to use them, you'll really wind up losing more than you made. So this is not the way you can become a consistent trader. This is not the approach you need in order to be trading 20, 30, 40 years down the road. We're not looking for home runs. We're looking for methods that will stand the test of time and that will have this 2 steps forward, 1 step back approach. So what is that? What gives us this level of consistency in our trading? Well, this brings us to strategy number 4. This is a strategy I was taught on the floor of the exchange some 30 years ago, and I've been using ever since. It is probably our most consistent strategy to date at Specialist Trading. And let me show you some of the highlights and share with you some of the highlights of this particular strategy. Excuse me. Who is it designed for? Well, it's designed for all traders. All right. So in other words, it does not matter if you've been trading for a couple of weeks and say, Steve, I don't really have experience trading. I don't really know anything about trading. Doesn't matter. You're going to get the same rules as someone who has been trading the markets for 40 years and is a hedge fund trader now. Because we have people who have just started trading, and we have hedge fund managers who trade strategy number 4. They are members of ours. All right, so it's basically designed for traders looking to catch quick momentum moves. The basic format of this strategy is you're getting in and out rather quickly. But we also show you ways in the course where to stay in the trade a little bit longer. So you do not have to get in and out quickly if you do not want to. You can stay in longer if you want, and we teach you how to trade it more aggressively. Now, its intensity level from 1 to 3, if 1 is the most intense of all strategies you've ever traded, where you have to be glued in front of your computer 24/7, and 3 is the least intense, where you just basically have to enter an order and walk away, it falls right in the middle. It's a very smooth, easy strategy to trade. It only uses 1 indicator. All right? That's all it uses. It's very simple, very pattern-based. So we're only really looking for a pattern that gives us the proper setup. Now, this strategy is our most consistent because it works in any time frame, excuse me, any direction, and in any market. So we have currency pair traders who trade this. We have option traders who trade this on stocks. We have intraday traders who trade this on the futures. It even works on commodities. I'll show you a lot of examples in just a few moments. It's a great strategy, has roughly about 5 rules. I'm going to share with you 2 of these rules, but please remember, our edge at specialist trading is consistency. We are not looking for home runs, even though every once in a while we will hit a home run. And I'll show you some examples of that in just a few moments. That's not our goal. Our goal is to have you trading 20, 30, 40 years down the road. And the way you get that is by being consistent. 2 steps forward, 1 step back. When I was trading on the floor, I knew of tons of traders who made hundreds of thousands, if not millions of dollars in a relatively short time. And guess what? Not one of those traders, not one is still trading today. They've all been wiped out. They've all lost it. So that's the point. What does it matter if you have this tremendous system or strategy that generates tons of percentage points per month? You can easily lose it. We're more impressed by people who have this slow, consistent manner in their trading, because that's the way you're going to be trading 20, 30, 40 years from now. So that's our goal. That's our motivation at specialist trading. Our edge is consistency. All right, so let's share with you 2 of the rules, okay? These are the 2 of the basic rules. I can share with you that the other rules are simply the pattern that we're looking for. We need to look at a pattern roughly of about 10 bars back. Also, we need to have rules for exit and for stop placement. I can't give you those all today because it wouldn't be fair to the students and members of ours who have already spent hundreds of dollars for this. But I will share 2 of the rules. Here's the first one. We're looking in the setup for a bar that looks like this. It closes in its top 25%. All right? Now, if that's confusing, just take any bar. It does not matter if it's an open, high, low, close bar like this, or if it's a candlestick. The top 25% of the bar simply means the extreme high and the extreme low, and then you just divide it by 4 separate equal parts. If we close anywhere in that top quarter, well, this is telling us that we have an indication to buy, provided all the other rules are met. Now, conversely, if we have a bar closing in the bottom quarter of its range, from the extreme high to extreme low, regardless of what type of bar it is, a candle bar or an open, high, low, close bar, if it closes in the bottom quarter, well, that's telling us we have an indication to sell. Here's the most important part about this rule. Who is telling us there's an indication to buy or an indication to sell? Is it some trading guru on TV? Is it some news event that we're waiting for to come out before the opening of the day? Is it some person in a chat room or a trade room telling us? No, it's coming from the most important thing you should ever listen to, and that's the market. You see, it doesn't matter if this bar in front of you is a 5-minute bar, if it's a tick bar, if it's a weekly bar or a daily bar. The market, in our experience, usually tells you everything you need to know. There's no reason to overcomplicate your trading by listening to outside sources. Remember I said that the reason why most traders fail, upwards of 80%, is because you're giving your power away. You're waiting for someone or something to tell you what to do. It's our opinion that the only thing you should be listening to is the market. It's a lot simpler to understand. You don't have to come to all this convoluted logic of figuring out, well, is that good news or is that bad news, or what exactly does he mean by this? You just listen to the market. And lastly, it's a lot less expensive. Basically, you're just looking at any bar chart, and that's all you need to know. Now, that was the first rule. The second rule is, if we see this setup, our buy signal can only be entered above the 50-period moving average. So we're not going to go long if we're below the 50. The 50-period moving average is called our buy-sell line. We only enter long trades if we enter above the 50. We only enter short trades if our entry is below the 50. This adds tremendously to our consistency. Think of all the times you've had winning and losing trades. I can almost guarantee that the winning trades were because you were in sync with this simple rule. You were going long above the 50-period moving average. Think of how many times you tried to pick a top or a bottom and you lost money. Most likely it was because you were out of sync with the 50-period moving average. So these are 2 extremely important rules that are coming straight from the market, not from an outside source, just from the market itself. You can take these 2 rules I've just shared with you and build your own strategy based on them, or apply them to what you're currently using. And I really feel strongly that they will increase your odds for success. All right, so let's look at some strategy number 4 examples that incorporate these 2 rules. But once again, remember, we're not going to discuss, I know the first thing you're probably going to say is, well, where do I exit? That's a great setup. Where do I exit? Where do I place my stop? What's this based off of? Please remember, I'm only giving you probably a third of the rules in strategy number 4. It's not fair to me. I can't give away the whole, the whole secrets, because it wouldn't be fair to the people who have purchased strategy 4. But these are probably 2 of the core rules, once again, that you can see right away how consistent they are, and you can build your own strategy off them, or you can apply them to what you're currently trading. All right, and once again, also, if you have any questions, please wait till the next 15 or 20 minutes where we'll go over any questions. All right, let's start out for stocks, and let's look at this example here in ABC. The first thing we notice is that price is above the 50-period moving average, all right? So what does this tell us? It tells us that no way we're going to be shorting ABC. There's no way. Why? Because price is above. Now, if we look for that simple pattern, we see here circled by 3 blue circles here. This is where we have the perfect example of bars closing in the top quarter of the range. Now, there are many other bars that close in the top quarter of their range here as well, but they did not meet the rules of the strategy. Remember, we're looking for a specific pattern. But these were all deemed as valid setups to go long ABC, and you see these were all strategy number 4 setups to buy. Each one was a winner. If we look at FSLR for solar, we see here that price is below the 50-period moving average. Okay, so what does that tell us? It tells us in hindsight that there's no way we would have ever tried to pick a bottom. There's no way, because if price is below, that means we're only going short. And if we're going short, we're looking for bars that close in the bottom 25% of their range. Here were 3 examples right here, and these were all strategy number 4 valid setups to go short. Each one would have been a winner. If we look at UA here, I want to show you this example. We don't have the 50-period moving average plotted. It was plotted, but it was too low for this particular chart. But trust me, price is above the 50, and we have a bar here that closed in its top 25%. This turned out as well to be a valid setup to go long, so you would have entered UA, and that was a valid buy signal, and look what happened. Remember, we're looking to catch quick momentum moves. When the market closes in its top 25% of its range, it's giving you a tremendous clue that most likely it's going to be continuing in that direction. All right? Remember, we're listening, we're taking our signals from the market, not from some trading guru or some indicator. We're taking our signals from the market. And by closing in its top 25% of its range, the way it did here, it is screaming that most likely it's going to go higher. And as you can see, UA gained 11 points in just 4 days. Now, one of the best things about this is that the market told you it was going higher before some news event. Obviously, we had some news event or something came out where the stock gapped up. We see the same scenario happen in CMG. We are above the 50-period moving average. This was our valid buy setup. It met all the requirements, all the rules in the particular pattern, plus we closed in the top 25% of its range. So if you're an aggressive trader, you could have purchased the stock that day. If you're an option trader, you could have just simply gone long the options. I'm showing you this example because I know this is an expensive stock. I'm sure not a lot of us can afford a $600 stock, but we have many traders and students who trade options who purchase the long calls. So you could have simply purchased this, and look what happened. Now, we had a signal to buy from the market, not from an outside source, not from some news event, but 2 days before the news came out where the stock gapped up. Okay, so strategy number 4 had a 75-point gain in just 2 days. So it wasn't as if the company called us up and told us in advance it was going to be gapping up roughly about 70 points. The market told us it was most likely going higher. RAI coming into February into March, we are above the 50-period moving average. The strategy generated 2 valid buy setups. The first one really didn't work out that well. Nothing much happened, but if you wanted to get in and out very quickly, you could have, or at the very least probably just broken even if you traded our conservative method of trading this. Or you could have stayed in the trade, and then if you wanted to, you could have taken another signal to go long, and the second one worked out much better. Now, this also applies to the E-mini. So it's not just a strategy that works on stocks. If we look at a daily chart of the E-mini coming into March before the market sold off, these were all valid buy signals that were generated using strategy number 4. We had 3 buy signals and 1 sell signal. Now, we realize that not everyone trades the E-mini overnight. So let's go to a 10-minute chart. This was about 2 or 3 weeks ago, the end of February. On a 10-minute time frame, first thing we ask ourselves, where is price in relation to the 50-period moving average? Price is above. So we had no sell signals this day. Every signal we got was a buy signal. You see how simple this rule is? It automatically puts you on the right side of the market. So since we're only looking to go long, we had 3 signals that were generating buys, and each one was profitable on this 10-minute time frame. This was just a couple of weeks ago. And we can also apply this to the Forex markets for all you currency pair traders out there. Here's a daily chart of the euro dollar. Now I show you this example because I know a lot of people say, well, Steve, what happens when you get whipsawed, when the market changes trend? Well, as we see here in the beginning of this chart, price was above the 50 period and then price closed below. Obviously, we're not going to catch every winner. We're not going to get in on every great trend. Remember, I told you, we're looking for consistency. We know that we may get stopped out with a small loss from time to time. But while we were above the 50-period moving average, the strategy generated 2 buy signals. And then once we crossed it below, the strategy generated 3 sell signals. So this is the beauty of this strategy. It's so consistent and it changes in sync with the 50-period moving average. Now once again, we're looking for consistency. I'm not going to sit here and tell you that every trade is a winner. Here's a perfect example, an Euler chart in SNDK. Okay? Now right off the bat, we have a buy signal that's automatically generated. If you're a student or a member of the Strategy 4 class, you automatically get these buy and sell arrows as training tools that tell you when a valid setup has been generated. So right here we have a green arrow pointing to this bar here. It's telling us that this is a valid buy signal, okay, according to the rules of strategy number 4. Let's say you were a brand new member and you say, boy, I love this course. Everything seems to work fine, so I'll buy this. So I'll go long SNDK, and look what happens. You're stopped out, okay? At this point right now, you're probably throwing the program through the window and saying, this stuff doesn't work. This guy is just like all the other vendors. He's just giving me something that doesn't work, okay? So you continue to watch and monitor, and then about a week or 2 later, the software generates another buy signal. Another green arrow appears, and you say, well, I'm not going to take this one because I got killed on the last one. I lost a lot of money, so I'm not going to take this signal at all. And you don't take it, and lo and behold, this one works great. In fact, you would have made back everything you lost on the first one, okay? So from time to time, this may happen. There's no way to alleviate any type of whipsaws or any types of small losses from time to time. But we also have to ask ourselves, how can we increase our odds for success? There's got to be a way to filter out at least some of those bad trades. And there is. In fact, there's a great tool. We combine strategy number 4 with the PET D. Now, if you're not familiar with what the PET D is, the PET D is probably one of our most popular tools, confirmation tools, as well as trending tools. It's a proprietary algorithm that I was introduced to on the floor some 30 years ago. The only trouble was the formula to figure out what it is. It's not that difficult, but at the time when I first learned it, I had to figure it out by hand, and we could only apply it, therefore, to daily bars. But with the advent of high-speed computers and programmers, we were able to develop this now to a color bar short-term trend identifier. So what we've done is we've applied it to the bars, and it simply changes the colors from green to red and identifies the short-term trend. So therefore, if you see a series of green bars, such as we see here in this example, this is telling you that the short-term trend is up. If you see a series of red bars, then you know that the short-term trend is down. Now remember, the 50-period simple moving average was telling us the overall trend. If price was above, then the overall trend is up. But the PET D really fine-tunes the shorter-term trend and tells us if that short-term trend is up or down. So when both are in sync, wow, we are really increasing our odds for success. So one of the beauties of this is that it will tell you in advance if a trend is happening even before news events. In fact, this just happened just the 29th, just about a few months ago in Amazon. Let's say you were interested in Amazon. You thought maybe some earnings report or something was going to come out in the company, but you didn't really have a clear idea yet. The news wasn't out, and as you can see here, the range was kind of going from upward to lower to upward, and you just kind of thought, well, you know what, I'll sit and wait. Maybe I'll wait to see what someone says in a chat room. Maybe I'll wait to listen to the nightly news and see what these guys say on TV about the stock, or I'll, wait for some news event to come out. Well, the news did come out on the 29th. I believe it was earnings. We're not really sure because we don't follow news. And had you waited, you most likely would have missed the majority of the move because it did gap up roughly from 310 all the way up to 350. Let's say you wanted to buy options on it. It's too late. Now the price is way too high, okay? Well, if you had applied the PET D, you see here that the colors changed. They were initially red, telling you that the stock was in a downtrend, but a full week before the announcement came out, the colors turned green, telling you that you were now in an uptrend and that it was okay to purchase this if you had some type of structure that was giving you a buy signal. And just looking out here, we did have a buy signal using one of our strategies. So that's the beauty of the PET D. It will tell you in advance many times before the news event comes out that the trend has changed in that favor. Remember, the signals come from the market, not from an outside source. So how do we apply it with strategy number 4? Well, we're only going to trade strategy number 4 buy signals that are colored green. Okay? So if we look back at that example that we had earlier, remember we had a trade that was a loser and then we had another trade that was a winner. How would we know which one to take? Because strategy number 4 just automatically generates signals that meet all the requirements. Well, a way to fine-tune is to apply the PET D. Remember, all buy signals should be colored green. And if we apply the PET D, well, we see here that the first buy signal was colored red. So we would have not taken that and bypassed this loss. See there? Now the second signal was validated. It was colored green, so it was confirmed by the PET D and it worked. So this is what we call our dynamic duo. This is how we increase our odds for success. We can also apply this to going short. Now, we're only going to take strategy number 4 sell signals that are colored red. So if we look here at this older chart of ROST, we see here that we are below the 50-period moving average, so the overall trend is down. The strategy has automatically generated 4 sell signals. Looking here, the first 3 were not profitable. In fact, you would have gotten whipsawed. You would have gone short, it would have gone up, gone short again, gone up, gone short again, gone up. So this is what many traders like to avoid. Now, even though we can't promise and guarantee that we always avoid any type of rangy whipsaw markets, we can help many times by applying the PET D. Remember, all sell signals should be colored red, meaning they should be in sync with the overall trend. So since the overall trend is down, we are below the 50 period, we want to see these sell signals colored red. If we apply the PET D, we see that the first 3 sell signals were colored green. So that means the short-term trend was not in sync with the overall trend. Therefore, it was not a high probability trade to take those first 3 signals. But the last signal was colored red. It was now in sync according to the PET D with the overall trend. So that was the one to take. You would have bypassed the first 3 and taken the last one, and look what happened. So now, even though once again we cannot promise we're always going to alleviate whipsaw markets, this is one way to help. This is one way to fine-tune and refine which signals we are going to be taking. So let's look at some recent dynamic duo examples. We call this our dynamic duo because strategy number 4 already has a high level of consistency to it. We're just going to increase those odds for success by applying the PET D to confirm whether we are in sync with the short-term trend. All right, so we'll look at some older charts at first of all the last couple of months, then we'll show you charts that happened within the last couple of days. Here's a chart in WYN. Okay, the first signal you see here on the left did not work. It was automatically generated a buy signal. The second signal did. All right, so had we just applied the PET D, we wanted to see that both of the setup bars were colored green. Well, the first one was colored red, so you therefore would not have taken that and would not have experienced a loss, but you would have taken the second one and you would have had a winning trade. How about Tiffany? Okay, well, the add-on automatically generated a buy signal, as you see here. Now, let's say you're a little conservative. You're not sure whether you want to take the trade or not. So by having the PET D, you could decide by using at this tool, as this tool is confirmed, whether you should buy or not. Well, in order to have a buy signal confirmed, the bar needs to be green, and we see here the bar was red. So you would not have taken this signal, and it was a good thing you didn't because look what happened in the next week. Obviously, some news came out where the stock dropped from 105 all the way down to 90 or 85 in the next week. We didn't know that. Tiffany and Company did not call us up and say, hey, Steve, warn all your members not to take that buy signal because we're going to announce something in the next couple of days and the stock will probably gap down about 20 points. Nobody called us up. No one told us anything. The only thing we listen to at Specialist Trading is the market, is the chart in front of us. it most of the time tells you everything you need to know. How about NFX? Two buy signals, both were profitable. If you had had the PET D, you would have seen that once we apply it, they were both colored green. So that's why they were confirmed by the short-term trend tool. ABX, now we don't have the 50-period moving average plotted here, but it's safe to say the stock was in a strong downtrend, so it was below the 50-period. But in all actuality, we had one buy signal here, and then we had a sell signal. Which one would we have taken? Well, in order to have a valid buy signal, this bar should have been colored green, and this one should have been colored red. Once we apply the PET D, we see that the buy signal was colored red, so we never would have taken it, and we would have taken this short signal. About Yahoo, okay, this was just about a month ago. Two sell signals. The first one worked out nicely. How should we know whether to take the second one? Well, if we apply the PET D, we see the reason why the first one worked out well was because it was below the 50 and it was colored red. So the stock went roughly from 50 down to 46 in 1 week. Now here's the second signal, and it's colored red as well. So it's giving you the confirmation to sell, and look what happened. All right, once again, some news came out. We had no idea. All we did was listen to the market. How about GPC? Well, we had two trades here. The first one was a winner. The second one would have been stopped out with a loss. If we add the PET D, we see that the first buy signal was colored green. That's why you could have taken the confidence to take the trade. The second one was colored red. You would have bypassed that and missed all the sell-off. Verizon, well, this is an interesting example because you're faced with a dilemma here. You've got a number of signals, one going long, one going short. Now, if we see here, the very first signal was a sell signal, which worked out well, roughly from 57 down to 54. You had a nice 3-point gain. Not a great signal because the market was kind of choppy, but it's at least went in your direction. As we add the PET D, we see the reason why is because it was colored red. So that's why the stock went slightly lower. But now, as we come to this here in the beginning of February, just about a month ago, we had a valid buy signal. Let's say you would have taken that signal. Why? Because it was colored green. Okay? Now, the next day, you had a sell signal. Would you have exited and gone short? No, because the bar was colored green. You see, we only go short if the bar is colored red, or we only sell. So therefore, you would have held on to your long position in Verizon, bypassed the sell, and look what happened. Okay, stock went roughly from 58 all the way up to 64 in the next couple of weeks. How about SLV? This is the ATF for silver. Now, once again, the price is below the 50-period moving average. We don't have the 50 here, and the screen was too far above. But trust me, price is below, and these were all valid sell signals to go short. Each one worked out well. If we apply the PET D, we see that the reason why is because they were all colored red by the PET D. And we can apply this to GLD, that's the ETF for gold, the stock that trades gold, is represented off of gold. We had a buy signal generated here just a few months ago in the beginning of 2015. Now, let's say you were a little on the fence on this one because you see prices below the 50, it's above, it's below, it's back above. Maybe you're a little reticent to take this trade. By simply applying the PET D, you have the confirmation to take it because it's colored green. So at least you know you're in sync with the short-term trend. You could have gone long gold on the first week of January, and look what happened after that. See, we're combining the consistency of strategy number 4, which by itself is still a great strategy, but we're also increasing our odds for success by applying the PET D in combination with it. Now you see here, we just applied this to a couple of ETFs. We can also apply this to commodities. Here's a chart on crude oil. We all know that crude oil has been going lower. Why? Because it's below the 50-period moving average. We don't care what the fundamental news is. We don't care what's going on economically or around the world. All we care is with where is price in relation to the 50-period moving average. If price is below, we're selling things. In this case, it's crude oil. Now, we had 3 valid sell signals that were generated by strategy number 4. But are they confirmed? All we have to do is apply the PET D, and yes, each and every one of those signals was colored red, so it would have given you the confidence not to think that crude oil was bottoming out, that the trend was still lower. And we can apply this to a weekly chart of the E-mini. Here's a continual chart of the E-mini futures going all the way back to 2013. Now, these were all valid buy signals, but we realized that not everyone trades the E-mini on a weekly basis, holding positions overnight for that long. So you could use this as a trend identifier just to tell you what direction you think the market is going. And once a signal is generated, well, then you even have a stronger validity and confirmation that we're going in that direction. Now, that's a weekly chart of the E-mini. If we go down to a daily chart, we see here that we had the same dilemma. We had a buy signal followed by a sell signal. Both met all of the rules according to strategy number 4, but which one would we have taken? Which one would we have stayed in? Well, this is where it gets difficult sometimes in these kind of whipsaw, volatile markets. But the pet D oftentimes will get us out of trouble. So if we apply the pet D, we see here that both of these signals, both long and short, were colored green. Therefore, we only would have taken the long one because we cannot go short if the bar is colored green. So you could have gone long the 1st of February, just about a month ago, off of this signal, and look what happened after that. We had a really nice rally in the E-mini on a daily time frame. And then lastly, we're going to apply this to intraday. I know a lot of you are saying, well, Steve, I don't trade daily bars, I don't trade weekly bars. Well, here's a 5-minute chart of the E-mini just about 3 weeks ago, and you can see these are all the signals that were generated. We had a sell signal generated that was colored red. We quickly ran out about 5 points. We had a buy signal generated, colored green. It didn't do all that well, but still went up a couple of points. At the very least, you could have just broken even, but then it was followed by 2 sell signals that were validated by the pet D, and you would have had some very nice trades coming into the end of the day here. So that's on a 5-minute chart. And then lastly, we can look at the currency pairs. Here's a daily chart of the Canadian dollar. These were all strategy number 4 signals. Strategy number 4, once again, is consistent by itself, but once we add the pet D, we see that each and every one of those signals was colored green, giving you the confidence to go along the Canadian dollar. Now that's a daily chart. We can also look at weekly charts. Here's where a lot of people have trouble, beginning students. They say, Steve, I'm not really sure what side to be on. We're above the 50, we're below the 50, we're back above, and the signal has generated to go short. What if we bounce back up above? These whipsaw markets scare me. This is where the pet D comes into play here. True, it's very true that many times you get into these whipsaw scenarios, and as I've stated, we cannot guarantee that everything will stop any type of whipsaw or rangy market. But the pet D helps tremendously by getting you in sync with the signal. So if a sell signal is generated, as we see here on this weekly chart of the euro dollar, you want to make sure that it's colored red. By applying the pet D, we see that, yes, it was colored red. In fact, all the bars were red, even the ones that were above the 50s, telling you in advance that the euro dollar is going lower, and look what happened from last year to the beginning of this year. Okay? Once again, we didn't listen to what was going on economically around the world. We didn't care what was going on with the euro dollar. All we listened to was what the market was telling us. It's so much simpler and easier to trade that way than to rely on outside sources to tell us what to do. Remember, it's been estimated that upwards of 80% of all traders fail. It's our opinion because you're relying on someone or something else to tell you what to do. All right, so let's recap. We share with you 2 of the rules of our most consistent strategy to date. Strategy number 4. Remember, you always want in your setup bar, you want it to close in the top quarter of its range or the bottom quarter. All right? That gives you this added consistency. As well, if you go long, you must be buying above the 50-period moving average. If you go short, you must be selling below the 50-period moving average. Even if you didn't, don't believe in strategy number 4 or it doesn't attract you, you can use these techniques and edges to your own trading strategy that you're currently trading with right now and really feel it will increase your odds for success. So we showed you tons of examples of strategy number 4 in all markets and all time frames and how consistent it is. But then we also acknowledge that sometimes you will have small minor losses. So how can we increase our odds for success? By adding the pet D. Once you combine these 2, the pet D is a short-term trend identifier. You have what we call our dynamic duo. This is by far our most popular course and program at Specialist Trading because we have so many traders who have finally gotten on that road to consistency by applying this. So, before we go to any questions and answers, ask yourself, do you think these edges could have helped your trading this past year? If you've been having a difficult time being consistent, even if you just applied that simple 50-period moving average rule, we really feel that you could increase your odds for success, all right? But if you have the dynamic duo, we really feel you're going to get back on that road to consistency. So, before we go to questions and answers, I want to have all of you take advantage of this special 2-for-1 attendee we have for all the course attendees today. This is a great package because we're combining the strategy number 4 package with the Primo Early Trend Detector, which is the PET-D. That you get instant course access, detailed instruction. We tell you all the entries, all the exits and stops. It comes with the add-on that will automatically generate signal alerts. And you get access to my personal email where you can contact me whenever you like with any questions. In fact, let me show you what you get when you have these signal alerts. These are for educational purposes because ultimately we want you to find out where these signals have been generated. And you will. All of our students ultimately are able to spot on their own. But in the beginning, you will be emailed signals such as this. As you see here, this email alert was generated on the 23rd at the close of the day. Once you learn how to spot these, you don't have to wait to get these. You can take advantage of them that day as the market is closing. But on the 23rd, so you could check your homework, we had a signal to go long in McDonald's, okay? The trend was up. It was a strategy number 4 buy signal. I can't give you the entry or a protective stop, but I can tell you that a signal was generated. And as you see here, on the 23rd, the signal was generated. The stock closed in the top 25% of its range. It met all the requirements of the pattern we're looking for, looking back roughly about 8 or 10 bars, and we're above the 50-period moving average. So it met all the qualifications. Now, you could have just taken this on its own because it is a very consistent strategy. But with the help of the PET-D, it gives you the confidence to take the trade because you have confirmation. Remember, all buy signals need to be colored green. So if you simply added the PET-D just a few weeks ago, you would have seen that not only was the buy signal colored green, but the past couple of weeks have been colored green. So this gave you a lot of confirmation that we are in a short-term as well as an overall uptrend. This was on the 23rd, and in 2 days, the stock gained 5 points in just 2 days. So you could have purchased the stock. We have people that only trade options that could have gone long the calls. There's lots of different ways to trade this. Now that was in McDonald's just about a couple of weeks ago. Let me share with you what happened this week. If you're an intraday trader and you're trading the E-mini, this is a 15-minute chart that I took just hours before we started today's presentation. Now, we ask ourselves, where is price in relation to the 50-period moving average? Obviously, price was below coming into today, so therefore, the strategy generated nothing but sell signals. All right, and these were all validated by the PET-D. Each and every one of these sell signals on a 15-minute chart was colored red. So you had the confidence to take each and every one. Some generated as little as 5 points. Some generated upwards of 10 or 15 points in the E-mini. Okay, this was just 2 days ago. As you can see here on the left, this is 310. This was on Tuesday. This was Wednesday. And lo and behold, this was this opening 15-minute bar. Now this was colored green by the PET-D, and guess what? The strategy generated a buy signal as well. So if you wanted to, you could have taken this signal as well. And as we see here, I had to cut that short because the market was still trading. But in the first hour since that signal was generated, the market went up another 5 points in the E-mini. That's $250 per contract. You could have gone in and out, as I stated, very quickly and taken a quick 5-point gain, or at the very least move your stop to unchanged and just broke it even if it didn't work out. But just to show you the consistency as well as the confidence to take these trades when they are in sync with the PET-D. This just happened today, this morning. Now, one of the best things also with the PET-D, because we've talked a lot about how it works with strategy number 4, you can apply it to any strategy you're currently trading. As well, you can use it as a long-term identifying tool. Here is a monthly chart of the S&P 500 going all the way back to 1995, 20 years ago. We see here all the peaks and all the valleys that the market has gone through in the past 20 years. If you have a long-term portfolio in your IRA or in some type of investment, wouldn't it have been some type of a great help to know when the market was about to change and when it had changed trends, you could have exited your portfolio and then gotten back in? Well, if we apply the PET-D to these monthly charts, we see here that the majority of bars were colored green all the way up until the dot-com bubble burst, and then you could have exited roughly right here when you had a confluence of red, staying out of all this crash, got back in 2003, ridden the market all the way back up, exited roughly around here when you had another confluence of red bars, missed all of the financial crisis and the banking crisis, and then gotten back in and continued to remain long. So the PET-D will not only work as some type of identifying tool to tell you, to confirm a trade, it will also help in long-term investments as well. So it's a great, great thing to have in your trading plan, regardless of what style you trade, what method, or what market. So once again, for all of our attendees today, we're providing this 2-for-1 special. You're getting strategy number 4, which in and of itself is a tremendously consistent strategy, combined with the PET-D. Now, if you purchase these individually at Pro Trader Strategies, my sister site, which promotes and markets all of my courses, this would cost you close to $3,200. But we're dropping the price today for all the attendees down to $19.95 for all of these, both of these strategies, and we have payment plans available. So you don't have to come up with $19.95 altogether. You can talk to the people at Pro Trader Strategies, put down some type of a small deposit, and you can be up and running as early as today if you like with a payment plan. So there's lots of ways to get back on course. I know a lot of you were still only in the first quarter of the year, and many of you had all these hopes and dreams for how your trading was going to turn around. And ask yourself, are you on that road? Have you met your goals, or are you as consistent as you wanted to be? I've just showed you tons of examples in all markets, in all time frames, in all directions, using these two great tools, great strategy and great identifying tool. We really feel confident that they can get you on that road to consistency. So if you want to get on that road, if you want to elevate your trading, take advantage of this deep discounted deal with the strategy number 4 combined with the PET-D tool. Remember, usually runs for close to $3,200. We're dropping it down to $19.95, and you can use a payment plan if you'd like. Here's how to contact us. You can go to my sister site, which is Pro Trader Strategies, and contact any one of their trading consultants. You can email them at trading@protraderstrategies.com. You can call them directly at area code 310-598-6677. Or you can see the link at the very bottom there. You can cut and paste that onto your browser, and that will take you directly to the sign-up page. Now, if you look on your far right of the GoToWebinar column there is a little chat box. I believe Pro Trader Strategies has posted the link to the sign-up page and to getting that discount. All you have to do is simply click on that. That's probably the easiest way to access, and it will take you right to that page. But if you're interested in putting together some type of payment plan, some type of small deposit so that you can be up and running rather shortly, contact the people at Pro Trader Strategies either by calling or emailing them, and they will have you set up right away. Okay? Now I want to thank you. We have about 10 or 15 minutes left for any questions, so I'm going to open up the question and answer box. And thank you very much for waiting. As you see, I had a ton of charts to show you, so I didn't want to slow things down. Let's see, Linus is asking, does the noise on the lower time frame disturb the strategy? Well, no, because I showed you a couple of examples on a 5-minute chart as well as a 15-minute chart where strategy number 4 worked very well. Obviously, any type of noise will hurt from time to time, but that will hurt any strategy. I don't care what strategy you have. Noise will hurt from time to time. But that's the beauty of the PET-D. The PET-D often will keep you out of that noise because it won't confirm what the signal is. So oftentimes I've seen maybe 3 or 4 signals generated, and if I just blindly took them, I would get whipsawed and have these small minor losses. But by applying the PET-D, I many times did not take any of them because they were not confirmed. Therefore, I was kept out of a lot of losing trades. So yes, there will be noise on smaller time frames, but we're in luck because the PET-D will keep us out many times of that noise. Okay? Frank asks, just to clarify, my thinking is that the open is on the left side and the close is on the right. Yes, if you're looking at open, high, low, close bars, the open is on the left and the close is on the right. Okay? Please remember, though, it does not matter if you trade strictly with candlesticks or if you trade with standard open, high, low, close bars. Does not matter, or even if you use range bars. These techniques apply to all of those type of bars. We're just looking at a specific pattern that can meet all of those different types of bars and scenarios. So it doesn't matter. We have a number of students that say, Steve, I only trade candlesticks, so I'm not sure your strategies will work on my on candlestick trading. Yes, they do. They work fine. In fact, I trade them with candlesticks as well. So there's no way does that have any alteration on any of the strategies, okay? Michael asked, does the PET-D work on Forex and on 1, 5, and 15-minute time frames? Yes, it does, Michael. It works on, I showed you a bunch of examples on those great examples of the Canadian dollar on a daily time frame and as well on the weekly time frame for the euro dollar. I'm sorry I didn't show any intraday, but it works fantastically on intraday as well. We have a number of our students who only trade intraday Forex charts, and the PET-D works just as well, okay? SSS, are the buy signals colored red and the sell signals colored green? Well, yes, that's the way I did, and depending on what software you have. Some software packages will color them differently. Some will only have dots that appear, but basically a green bar or an up arrow is what you should be looking for. So if you have an up arrow, green up arrow, that's telling you that the add-on has generated a valid buy signal. If you have a downward red arrow, it's telling you that it has a valid sell signal. But remember, that's just strategy number 4. Then in order to get the higher rate of consistency, you have to add the PET-D and make sure now that the bar is colored the same direction as the arrow, okay? So now I know your next question of a lot of people is, well, what platforms can I apply this on? Probably the 4 or 5 major platforms. First of all, TradeStation, NinjaTrader, Metastock, and MT4 all work extremely well with our Strategy 4 and PET-D combo. The other platform is Thinkorswim. It works as well, but there's just a few alterations you have to do because you have to apply NinjaTrader with it as well. But the people at ProTrader Strategies can explain that to you. So don't worry. If you have Thinkorswim, you can still use this format. Let me see here. Stephen asks, is this recording? Yes, it is. Ron asks if I can show intraday. I'm sorry, Ron, this is just a static PowerPoint presentation, but I did show a number of intraday examples. I showed a number of 5-minute chart, as well as some tick charts, as well as a 15-minute chart, okay? Remember, this is recorded. If you want to get a link to this recording, you can contact the people at ProTrader Strategies, but please remember that special that we have along with the small deposit or payment plan is only for a limited time. So don't waste your time watching this video for days, if not weeks, because if you decide to take advantage of this discount, it may be gone as well as the payment plan. Okay? Every week we talk about something different. Raymond asks, does it work on Thinkorswim and candlesticks? Yes, it does. It works perfectly on both of those different categories. Kathleen asks, Steve, does the strategy discuss stops when you are wrong and money management? Yes, Kathleen, very good question. Yes, that is included in all of my courses. I always talk about money management, talk about where to place your stops and where to exit. The only reason I didn't discuss it today is because, as I stated earlier, it wouldn't be fair to the people who've already purchased the course for a lot of money, and then if they saw that I was giving away all the rules for free in a free presentation. So I gave away 2 of the very important rules, the setup rules, but the things you're concerned about, exit point, stop placement point, money management, yes, those are all included once you get the course. We would never forget those. Those are all extremely important pieces of the puzzle. Keith is asking, will the PET-D work with FXCM? You can use the free MT4 add-on that FXCM provides you with and then run the PET-D. Okay, so there's lots of ways. Remember that if you don't have MT4 or if you don't have TradeStation, there's lots of ways to go around it to use free platforms that certain companies provide you with. Okay. Let's see here. A few more questions. Does the PET-D work on offline charts? Yes, it does. As long as you have the platform, it doesn't matter if you're offline or online. It has to work through those 5 major platforms, though. Okay. Let me see here. Go a little forward. Do you have leased to buy program? I'm not sure, Ashok, what you mean leased to buy program. I'm not sure if you're saying do we have to lease or buy the program. Maybe that's what you're saying. It's a typo there. No, this is yours. That's a good question because we have hedge fund managers that trade this, and we have some people, some institutional traders who are very much interested in using this combo for themselves. or at least they want to make it into some type of a leasing program. If we decide to go in that direction, the price will increase because we will have many more people using it in an institutional format, and it will be you will be getting a charge probably every quarter. So that means that it will cost more and you will be getting quarterly bills. The best thing about this now is that it is not a lease program. It is a lifetime purchase. So if you decide to become a part of the dynamic duo we have here, strategy number 4, as well as the Pet D, it's yours for life. And you are a member of mine for life. It will not be something that you have to sign up every quarter. So that's another great deal we didn't touch on, is that you do not lease this. It's yours forever. And you can apply this, remember, to any strategy you may have and to any market you may be trading in any time frame. Okay? People are asking about tech help. The best thing would be to do, since that's all at Pro Trader Strategies, contact them for any tech support. They can fill you in on all the hours for tech support and how simple it is to put the, but we've had no problems. I mean, we have so many new members and students every week purchasing all of our different courses, and we do have a tech support team that helps all of our new students. Let's see. Kathleen asked, if you have purchased strategy number 4 with your presentation the other day, what is the cost of the indicator? Oh, I'm see. Kathleen, I believe you have purchased strategy number 4 and you'd like to upgrade to have Pet D as well. Well, trust me, Kathleen, we won't charge you the full price. They will work together with you some deal so that it is in concert with what this offer is. I would just contact your personal trading consultant that you purchase a strategy number 4 through, and they know on record that you have that, and they will work with you to put together the combo package at a very discounted price because you are a favored customer already. Okay, so don't worry, you will not have to pay full price. Yes, someone just joined the webinar. Just contact the people at Pro Trader Strategies. There's the information in front of you, and they will send you the link. But please remember, do not spend a lot of time watching this or waiting to watch it because that offer will not stand in a couple of days from now, okay? Michael asks, does the software need updating and are they free? A good question, Michael. No, there's no need to update the software. I've been using this for roughly 30 years. Once again, I started out calculating it by hand, but since I've been doing that, I've never updated it once in those 30 years, okay? So there's nothing that needs to be updated. There's no updates or alterations that happen on a quarterly basis. This is just something that has stood the test of time that traders taught to me. So it's not something I devised off some convoluted theory that happens, once a day in the markets. This is just something that traders have been using for ages, and that I don't know why more and more people don't trade these simple but very consistent techniques. For some reason, we've been taught that the more complicated a trading style is, the more validity and the more successful it will give to your trading. And that's not true. It's been the opposite in my experience. The more simple something is and the least amount of rules, the more consistent it is. So that's what this strategy number 4 is, and that's what the Pet D is as well. Okay. Maturas asks, can we use the Pet D as a standalone? Yes, you can. Once again, I showed you how you can apply it to a long-term chart, such as the S&P 500 on a monthly time frame. There are many uses on how to apply the Pet D. I teach you that in the course. But in the 2-for-1 special we have today, it comes with strategy number 4. So you're basically getting 2 great deals for the price of 1, okay? I think we have time for just 1 or 2 more questions before we go. Someone asked, do you have tech support for 24 hours? That, once again, is something that you have to ask Pro Trader Strategies. But if you need tech assistance, they can schedule a time for you if it's a certain amount of a certain time of the day. And we have members in over 80 countries. So all of our strategies and our courses are taught and traded in over 80 countries around the world. All different time zones, all different types of traders, different skill levels, different experience levels. So we have people there for each and every one of your different levels and different time zones. So don't worry about being able to learn this. Don't worry about being able to get access to tech support. We will be there for everyone. Okay, I think we're just about at the end of this presentation. As I stated, I had a lot of great free information to give to you. In closing, I just want you to ask yourself, if you're not on that level where you wanted to be some 3 or 4 months ago with your trading, If you started out making all these promises about what you wanted to do in 2015 and you haven't achieved them yet, I strongly feel that my courses, my methods will help to elevate your trading to those levels you want to achieve. And the best way, what we found the most success is with strategy number 4 combined with the PET D. That's why we call it our dynamic duo. Usually when we combine these two, it costs over $3,000, upwards of $3,200, $3,300 just to get both of these methods together. We are deeply discounting it down to $19.95. In addition, we're offering a payment plan. So you get all these things included just for your attendance today. So if you're really interested about getting to that level of consistency and taking your trading to the next level, I strongly urge you to take advantage of this great discounted deal, okay? I want to thank you so much for attending today. Thank you so much for listening. Each and every week we give you a different offer or something different, but this is by far our most consistent approach to trading the markets. So thank you once again so much for attending, and I look forward to each and every one of you becoming students of mine at Specialist Trading. Thank you so much. We'll see you next time. Bye-bye.